Is Australia's housing price bubble about to burst? This year's seen a fall in Australian home values, and anticipated interest rate rises are adding to market jitters. It could be good news if you've been priced out of buying your own home, but it's bad news if you already own one and are hoping to protect the value of what, for most of us, is our biggest asset. Greg Hoy reports that anxiety in the housing market is being exacerbated by allegations of dodgy auction data.
Blurring the dream of Australian home ownership.
What do you think of the view that there's a bubble building in house prices and that it could soon burst?
Look, hard to say. From the amount of properties that are passed in, it's obviously something's happening.
As a rough ballpark, I sort of think house prices are probably 25 to 35% above a long-term sustainable value. So, yes, to me, that's bubble territory.
A housing bubble really does imply that Australian housing markets are set for quite a rapid crash in home values. The evidence to date is absolutely the opposite.
Our mortgage debt is at the highest it's ever been, and is actually at near the same levels that Ireland has actually been recording. And of course, we know that Ireland had quite a housing market crash. So given the level of debt that's in the market right now, that the Australian housing market is quite vulnerable.
Start me where you like, now it's where we finish that's important.
Bidding on Saturday for their first home with help of a buyer's advocate, Angus Curry and his fiancée found the competition fierce.
First call at 430,000 and 5 now. 440? 440 now, straight back. Strong bid, sir.
Oh, looks a lovely house.
Feeling confident?
We've got a chance, but we're not quite sure how it's going to go.
But across town, in leafy surrounds and a higher price bracket, there was no competition.
$3 million, can I see a fair, reasonable start anywhere at all?
We're seeing a lot of vendors in that higher end of the range that are having to lower their expectations to obtain a sale.
International research, including by the IMF and The Economist, has recently suggested Australian house prices are overvalued. And there are local analysts who agree that an increasing glut of homes for sale reinforces this belief.
As the capital city prices have come together, partly because Sydney's gone nowhere in real terms for a decade, they're all looking roughly the same level of expensiveness. So the long and short of it is, it's a national problem.
There are 370,000 properties on the market right now, and that's actually up by 69% compared to the same levels recorded this time last year. House prices are declining and are likely to decline further from this point.
Now's the opportunity. We're over here.
But there's a strong difference of opinion.
I think this is the best outcome that anybody could have hoped for, an absolutely controlled exit from a very strong growth phase.
Australia's most prominent and commonly used home value analysis is compiled by the recently separated companies RP Data and Rismark. In the last quarter, the index suggests capital city home values on average fell 2.1% seasonally adjusted, the worst slump in 12 years. But RP Data remains optimistic the nation's homes can hold their current value.
We're seeing unemployment below capacity. We're seeing population growth still above average. Looking at those fundamental drivers and detractors in the marketplace, it doesn't paint as grim a picture as many are pointing out.
I have to disagree with that argument. I think the market is more influenced by the cost of debt. Sadly, when you look at some of these companies, you've got an issue over a potential conflict of interest.
The allegation is that housing research companies like RP Data tend to project positive home value forecasts because many of those who buy their research are involved in real estate, as is RP Data's research partner Rismark. The real estate industry, it's argued, tends to underreport failed auctions. But RP Data stands by its research, which it says is audited. And it counters that critics like the research house SQM are simply trying to draw attention to themselves and that it's their methodology that is questionable.
We're looking at the evidence and we don't see any recovery really occurring until we probably see, say, a cut in interest rates or some type of government intervention such as the First Home Owners Grant.
I completely disagree with that. I believe SQM are reporting about a 67% increase in listings in the market. Our own figures are showing a much more subdued rate of listings growth.
So caught in the crossfire over reliability of housing forecasts are sellers and buyers.
Where we might have gone to an auction last year and seen 4 or 5 bidders at auction, which has really pushed up the price, we're now seeing that there might be 1 or 2. The market is more stable today, but I certainly don't see a bubble that's about to bust anytime soon.
Better make it now, ladies and gentlemen, first time.
There's also vigorous debate over why some states are faring worse than others, like the Brisbane and Perth regions, where the housing glut is greater.
We are most bearish on the southeast Queensland market. There's actually a decrease in the movement of people moving from the southern states to southeast Queensland. West Australia is a very interesting market right now. I mean, one would think that the housing market would be well supported by the commodities boom. We believe that that market is actually super sensitive to interest rate rises.
There's some solid reasons why those cities are such weak performers, and part of it is due to the fact that there have been exceptionally strong performers in the years leading up to 2009, 2010. We probably will start to see those two cities or those two states actually turning around sooner rather than later.
$495.5 the bids here now. First, second, third and final call.
Back at the auction, this was not to be first home bidder Angus Curry's lucky day.
Sold!
You came close there.
Oh, we did. So it was a little bit disappointing that they just went a little over the threshold that we were prepared to buy.
I can't sell it to you if you won't bid.
While the $2 million home didn't draw one bid.
It is those premium markets that seem to be leading the largest falls in home value. So certainly demonstrating the volatility, showing a lot stronger growth in the good times and falling a little bit more in the bad times.
Anybody at all? We'll pass the property in there and we wish you a very pleasant weekend. Thank you.